Chat. 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 You rejected 2530 again. That's okay. I think that's okay. It's kind of similar to last time. The sell-offs seem like they're getting smaller and smaller from these like key resistance points. I haven't really been paying attention to the price action though, but we can look at it. Same way we looked at it last time. It was ranging like this. What's up, Jared? How you doing? I guess it's a little early. A little early. But let's see. I forget how to do it. Isn't it? No. Maybe it's this? No. I forget which thing it is. Price range. Good news, I might break even on my terrible Beyond investment. Time to get out. You do whatever you want, but investing in something and waiting all that time and selling for break even is the reason why most people aren't successful in the stock market. I'll be straight up. I've seen so many people do that, bro. You know, I don't find Beyond interesting at all, but I've just seen that happen many times. So, you know, it's your choice what you want to do, but I think that was a lot of wasted time to just sell at break even. Last time you were at 25 bucks, you sold off 11%. And then let's see. When was this? A week ago you hit 25.30. You sold off 4.5. I mean, it's like I said, it's still a little early to say, but you hit 25.30 again. And so far you've only sold off 2.7%. And was there any other times we hit 25? Let's see. Oh yeah, you hit it back here. But it actually went a lot higher last time, so I don't know if this is going to be relevant again like it was. I feel like it would have to range a lot longer. But I mean, if you're going all the way back here, you know, it sold off pretty huge. So I don't know if you can. Like I said, I think you need more time in this price range for this to be relevant. But I guess we'll see how much it sells off here. I guess we'll see. What's up, Moose? How you doing? I'm an idiot. That's all there is to it. I haven't sold anything yet. I mean, like I said, you do whatever you want. If you think it can go up more, you know, whatever. I've just seen that happen way too many times. It's just it's a common thing in the stock market. People make investments and then they go against them, and for some reason they won't sell for a loss, but they'll sell as soon as they're at break even, and it doesn't necessarily make sense to me. If you're not willing to sell for a loss, why are you selling at break even? Like that, to me, that doesn't make any sense. If you don't think the investment's good, you sell it for a loss. Like, as a trader, like, selling for a loss isn't a big deal. So if you weren't willing to sell it for a loss, why would you sell it at break even? To me, that doesn't make sense. And I've seen that happen with so many people on so many different investments. Like, I know someone who's done it with Microsoft, one of the top companies in the world. They were down like $10,000-$20,000 on Microsoft for months back in 2022 to 23. And then as soon as they hit break even, they sell it. It's like, it just doesn't make any sense. Like, if you thought Microsoft was a good investment, or beyond in this case, at whatever price you were buying it, like, why did it change because you were down on it for so long? Like, to me, that just doesn't make any sense. It's like, you make a trade for profit. Should have YOLO'd into Avis, big rental car guy. I saw like an article that it's like short squeezing or something like that. Gotta have conviction in the plays or don't enter. Yeah, I mean, I'm just curious, like, why, like, if you had conviction in the play prior, why don't you have conviction in it anymore? Like, what changed? Is it just because you were down on it for so long? Because that's the reason why most people do that. You know, if nothing changed fundamentally or anything, like, I don't. But I also don't know why you entered the trade in the first place, so I've just, you know, maybe it is a good thing to sell a break even. I don't know. That's just not, to me, I just don't think that's it's just not a good, like, mentality to have. If you're buying something for a trade or something and it goes down and you sit and hold it for months while it's down, I just don't know why you would sell it. I just don't get it. Oh yeah, that's up a lot. I haven't even been paying attention to that. Driven by a short squeeze amid strong performance in trucking stocks, significantly outperforming the industrial sector's 1.45% decline. I wonder what the fundamentals on that. I wonder if it was just undervalued for a long time and people just weren't paying attention. Car. Tune into the new channel, How to Break Even in the Stock Market. I mean, it's not necessarily that. It's just a common thing I've seen throughout my time as a stock trader. I mean, I've done it. I think everyone's done it, but it's just, I just don't think it's a good way to approach the market. Like, you should be making a trade you have full conviction in, you know, even if it goes, like, you know, GameStop's the perfect example. There's no other stock I would even if it was like Apple or I always use Apple as an example, but even if it was like Apple or something. Speaking of Apple, did you guys see Tim Cook stepping down from CEO? That's kind of crazy. But, you know, even if it was like Apple or something, I would never have conviction in holding something like that. So I would never buy it. You know, I would never, even though Apple will probably go up forever, most likely, you know, it's probably one of the best investments you can make. I still, you know, if I was to make that investment right now, I wouldn't want to make that investment because I wouldn't be comfortable holding something like that if it went down. But I guess my point is you should be comfortable, you know, buying something and have it go down. Like, you should be convicted enough in the trade to be down on the trade. I mean, if you want to be successful, like, I just don't think buying something and then selling it for break even just because you were down on it is, I just have never seen that be successful, you know? Sometimes it's, you know, it can work out because the trade just wasn't good, and, you know, if it's bearish, it'll just keep going down, but it's like, why, you know, why would you make that trade in the first place, I guess? Yeah, they don't have any stockholder equity, but you got 30 billion in assets, 22 billion in liabilities. So, what is that? Like 9 billion? 10 billion? 9 billion? So yeah, it probably was undervalued because it's trading at 23 billion market cap now. It went up 6x. So, well, 24 billion. So you do 24 divided by 6. So it was trading at like 4 billion market cap. It probably was undervalued. It's not like a profitable growing business, though, I don't think. But they were profitable in 2023, and then 2024 they had a big loss. A pretty big loss in 25 as well, but not as big as 24, so it's not like a growing profitable business or anything like that, but it does seem like it was potentially undervalued. Did they have earnings or anything? March 27th. Is this earnings? No. When was their last earnings? Avis Rental. Investor Relations. What did that say? February 19th. That was their last earnings? Okay. Yeah, pretty interesting. Pretty interesting. Probably overvalued now. Yeah, definitely. I agree with you, Corey. This isn't my normal approach, but I'd rather put my money into other avenues. People make mistakes. Oh, yeah, for sure. Definitely. Definitely. But the point of, like if you want to be a profitable trader or someone profitable in the market, it's to minimize those mistakes over time and not like replicate those mistakes. So, yeah. I mean, that's why I'm talking about it so much, because it's a common mistake I've seen throughout my time as a stock market trader. If it wasn't something that I've seen like a ton of times, I wouldn't be talking about it. I wouldn't really care, but it's just something I've seen countless times. It's just a very common thing in the market. But like if it was me, I would have sold for a loss. Like if I didn't believe in a trade like that, I would have sold for a loss. Like I wouldn't even have cared. But that's just the type of trader I am. Well, I guess I literally haven't made a trade in like almost 2 years now, but if that was me, I would have sold for a loss if I didn't have conviction in that play anymore. Like I wouldn't have cared. I've sold for a loss plenty of times, like nothing wrong with selling for a loss. A lot of people, like a very common mistake is people are so like unwilling to sell for a loss that they'll continue to hold a bad stock while it continues to go down, and they're like, yeah, I'll sell it when it is break even. And it's like, that's such a huge mistake. Like if something's bad, you just fucking sell it, bro. You just sell it. Am I talking about AMC? I don't talk about AMC. The only reason AMC ever gets mentioned is because people in the chat for some reason are obsessed with that stock, and they think it's funny that people are like losing on it or something. But no, I don't talk about AMC ever. It's weird how often it gets brought up. Actually, it's kind of it's a little sus how it's on your guys' mind. If I'm just being honest, it's a little sus. Like, why do you guys care about that stock? literally. I'm not trying to be rude, but like, why do you guys care about that? Just PTSD? Yeah, I guess I don't know. I can't I've made and lost too many trades to have like PTSD on one stock. There was a day I literally lost like 3 or 4 grand in like 10 minutes during the stock crash in 2022 to 23. It was fucking nuts. I think I was down like a total of like 10-12,000 in like a day. It's fucking crazy. Like, You just got to get more seasoned, bro. You just got to get more seasoned. AMC was nothing. You probably had like $1,000 in that thing. Who cares? I mean, maybe you had more, but I don't know. If you haven't lost in the stock market, you're not a true participant. If I'm just being honest. If you haven't lost before, you're not a true participant. Losing is just part of the game. 2022 is depressing. It wasn't for me, because I was a day trader. I didn't have any positions. I sold all my shares and stuff at the top because I was just able to see that it was going to crash somehow, and I had a lot of confirmation. So I sold everything at the top, and I was actually able to be out of the market during 2022 to 23. I just made like a bad day trade, or a very over leveraged day trade, I should say. That was probably one of the, I mean, I've been down on GameStop massive, so I wouldn't say it's the worst trade I've ever done, but it was probably the worst trade I've ever done. Just going all in on in the middle of a bearish fucking crash, or more of a crash than the bear. It was more of a crash at that time. The bear market didn't ensue until like a month or two later. It was like mid crash. Yeah, that's it's funny, bro. Good times, good times, good times. But what's up, HTML Kino? Don't think I've ever seen that name in here before. I had some Rev. She gone. What the hell's Rev? It's probably the most accurate statement ever. I mean, it is. It is. Anyone who acts like they haven't lost before in the stock market, they're probably trying to sell you a course. If we're just being straight up, a lot of people try to pretend like losing isn't a part of this, but any real stock market participant has lost and is willing to share their losses. Most people will never do that because they have a course to sell and they have to make themselves look better than they actually are. It is what it is, but that's the stock market. And, people on Twitter, realistically. Real stock traders aren't on Twitter trying to sell a course. Unless you're Michael Burry, I guess, but I mean, did Michael Burry go broke or something? Why is that dude fucking on a Substack? Why is that dude selling a Substack and selling trade alerts? And like, did Michael Burry go broke? I don't know. A little sus. Hey, Aaron. What's up, bro? What's up? Revlon? What the hell's that? I don't know what that is. It's not a stock. What's up, Hugh G? What's up, Hugh G? Any smart person will take all their investing advice from Reddit. Oh yeah, that's where you get the best investing advice. All the... Oh, yeah. Definitely not. You know how many people I see on Reddit lately talking about how this rally in the stock market's bullshit and that they're going to short? Yeah, all those people are fucked. Dead ass. Every single one of those. If you're bearish on the market after it hits all-time highs, man, you're fucked. I'm sorry. You're fucked. He's got to be able to live off the Big Short royalties. That's fair. Maybe they're running low. Maybe they're running low on Big Short royalties. It's like, I need more income. Let's see. I think there's a couple articles to read, so that's kind of nice. Oh, what's this one? Is this another... This is another article referencing the Simply Wall Street articles. Like, that is... GameStop articles are so booty, bro. They're so bad. This article is about Avis. It's pretty short. It's just not going to be a very long stream clip, but maybe we can do that one. What's this one? This one looks like it could be okay. A lot of information. So we'll read that one. What's this one? This one could be... That one could be okay. I think this one was kind of interesting, if I remember right. And maybe this one. Does he get royalties for being depicted? He wasn't even in it himself. I got no clue. Turn off. Yeah, I guess that's a good point. That's a good point. He might not get royalties from that. That's a very good point. Turn off the Avis buy button. Only fair. Avis isn't up that much. It's only up 6x. It's not up no 200x. Did I read this one yesterday? I don't even remember. I think I read this one yesterday, didn't I? Yeah. What's this one? I don't like that one. Okay. Maybe we'll read that one. Maybe we'll read that one. I guess I should have started the stream a little earlier. I didn't know I had this many articles to read. But I guess we'll just read it until the market close. We can check Reddit before we start reading, though. I thought GameStop's tweet was pretty funny. Need weed money. Trading your Xbox or PS5 for $420.69 cash. Oh yeah, baby. Oh yeah. That's a pretty interesting trade offer. Very interesting trade offer. And then they redid it. They redid it. Need some green, and they redid the stickers and stuff. They traded the they traded the weed sticker for a fire sticker, which is so weird. So, yeah, I thought that was pretty funny. Make sure you guys hit the like button. It says there's 17 people in here, but we got 4 likes. That doesn't make... Should I... At this point, I shouldn't even have to tell you guys to hit the like button. I feel like that's like... If you've been here for long enough, that should be like a... You know, the second you open the stream, you should be hitting the like button. I shouldn't even have to be telling you guys this. Showed my girl the tweet, and she was trying to rip my Xbox off the wall. I think it has to be a specific Xbox or PlayStation. I think it has to be the Pro or something, or... I don't know, there's something in the fine print. I didn't read the fine print, but it does have to be like a specific console. Clickbait title got me. Is it clickbait? I don't think it's clickbait. I don't think it's clickbait. You think it's clickbait? I don't think it's clickbait. I think it's a very accurate title. Oh, they paywalled this article? What the hell? This wasn't paywalled recently. They just barely paywalled this. This wasn't paywalled last time I looked at it. Well, that's dumb. This is the one I like actually want to read. I think this is an interesting article. All right, let's get it. Let's get it. Did anyone watch WrestleMania or the new Kill Tony? I don't think there's any wrestling fans in my chat, but I'm curious if anyone watched that. The new Kill Tony is pretty funny. But I don't think anyone in my chat watches either of those things. I think I'm a loner in that. Nah. Aw, lame. Lame. Haven't watched WrestleMania in decades. Oh man, well maybe you should start. It's some good shit, bro. Wrestling's actually like pretty good now. I quit watching it for years as well, but like a year or two ago I started watching it again, and it's actually like really good. They have some good stars now and good stories. It's great. I love it. C82126. I'm just gonna call you C. I haven't seen that name in here before. I hope you're doing good. Hope you're doing good, my friend. Thanks for stopping in. WWE got me into UFC. Really interesting. That's interesting. UFC's dope. I just don't know really any of the fighters anymore. And the sports bets are kind of trash now. They don't have really many good plus 300 sports bets you can do for the money line. But yeah, UFC is great. Aljamain Sterling versus whoever he's fighting coming up this weekend. That should be a decent fight, I think. Hopefully Aljamain wins. Hopefully he wins. I am excited for the White House event. That's gonna be really good. Anytime Sugar Sean's fighting, you know, I'm excited. I love Sugar Sean. Not only, you know, just not just because Sugar Sean made me like 15 grand, you know. Sugar Sean did make me like 15 grand throughout my sports betting career. But I just think Sugar Sean's a funny character. I think he's a good guy. Me and him have similar interests. White House card is stacked. Yeah, it's gonna be good. It's too bad John Jones isn't fighting though. That would have been epic. Or Connor. It would have been epic to see either of those guys fight. Did you see the 420 ad? Yeah, I just looked at it. They're pretty funny. It's pretty funny. Alright, let me read this article for a second. Shouldn't take very long. I don't think it's very long. Alright. Tabletop gaming CAF's market is going to boom. Gamestop, Wizards of the Coast, Asmodee. Coherent Market Insights has released a new research report titled Tabletop Gaming CAF's Market, Industry Trends, Share, Size, Growth, Opportunity, and Forecast 2026 to 2033. The study provides a structured and data-driven perspective on the evolving market landscape, highlighting key growth drivers, emerging challenges, and strategic opportunities. It offers balanced combination of quantitative insights and qualitative analysis to support informed decision-making for stakeholders across the value chain. The report delivers a detailed evaluation of competitive intensity, regional performance, and long-term market outlook. It further examines critical business factors such as cost structures, investment feasibility, operational benchmarks, and expected returns, helping organizations align their strategies with current and future market realities. Request a man. I want to request a copy or a sample copy. What is this? Let me hold up. Intermission. Let me see what this is. You have to like give them your email and stuff. All right, I'm not doing that. Okay. This comprehensive study explores how the tabletop gaming CAFs market is transforming in response to technological advancements, regulatory shifts, and changing customer expectations. With increasing focus on efficiency, sustainability, and innovation, the industry continues to create new avenues for growth and differentiation. The insights presented are derived from a combination of in-depth secondary research and validated primary interactions with industry participants. This ensures the report not only reflects current market conditions, but also captures forward-looking trends relevant for executives, investors, and strategic planners. Key highlights: detailed business overview with segment-level insights, strategic analysis of competitive positioning and market presence, evaluation of strengths, risks, and growth potential of key companies, overview of product innovations and service developments, comparative benchmarking across leading players, insights into operational footprint and regional presence. Major market players: Gamestop, Wizards of the Coast, Asmodee, Fantasy Flight Games, Cool Mini or Not, Privateer Press, Paizo Publishing, Renegade Game Studios, Upper Deck, Gale Force 9, Cryptozoic Entertainment. Segmentations overview: casual gamers, competitive players, families, students, hobbyists, event hosts, tourists, online gamers. Research methodology. The research methodology is designed to ensure high accuracy and reliability of insights. It involves a combination of primary interviews with industry experts and extensive secondary research from credible sources. Data is carefully validated and analyzed to forecast market trends for the period 2026 to 2033, covering demand-supply dynamics, pricing trends, and competitive developments. Wait, is it just telling you about... Okay, I'm wasting my time reading this, apparently. Okay. Okay. I thought it was actually going to go into, like, the numbers and stuff, but it's just telling you about the article or the report. You have to actually, get the report, which is kind of whack. Wait, it's right here. Oh, that's 2025. Oh, man. I would request a sample of this article because I'm sure it's good, or this report, but I just don't trust it. I just don't trust it. Isaiah! What's up, bro? How you doing, man? Good to see you. Good to see you. They should just let me look at it, man. Why do I have to like request a sample for it? It should just be publicly posted. I'm not giving them my email, bro. I don't know what the hell that is. This article's short. What a rip. Alright, we'll read this one, I guess. This one's at least long enough for a stream clip. GameStop stock edges... Excuse me. Alright, let's do it. GameStop stock edges higher as PowerPack's digital card launch gains traction. GameStop Corp shares rose modestly. Oh my god, I can't read today, bro. Come on. All right. GameStop stock edges higher as PowerPack's digital card launch gains traction. GameStop Corp shares rose modestly in early trading Tuesday, climbing to $25.21 as the video game retailer continued to draw attention following its recent launch of PowerPacks, a digital trading card platform that lets collectors buy packs to unlock real PSA-graded physical cards stored securely in a vault. See, this is why I don't relate news or anything like that to stock price movement, because PowerPacks has been out for like 8 months now. Sure, GameStop did a public announcement finally, but if you've been following GameStop at all, like, you've known PowerPacks was a thing for a long time. At 9:54 a.m., GME stock was up 0.29 or 1.16%, extending a period of relative stability after stronger moves earlier in April. The stock closed Monday at $24.92, reflecting a 1.51% gain on the day amid broader market resilience. Volume remained active but far below the frenzied levels seen during the past meme-driven surges. GameStop's not a meme stock anymore, so I don't know. The modest advance comes 1 week after GameStop unveiled PowerPacks on April 14th, with the platform going live to the public on April 15th at powerpacks.com. The initiative allows users to purchase digital packs priced from $25 to $2,500 that unlock real professionally graded trading cards, primarily sports and collectibles, which can be sold instantly, shipped home, or added to personal collections. Every card is held securely in the PSA vault, blending digital convenience with tangible ownership. Industry observers viewed the launch as GameStop's latest attempt to diversify beyond traditional brick-and-mortar video game sales into collectibles and digital experiences. The company has been steadily building its e-commerce capabilities and exploring new revenue streams as physical game disc sales continue to decline in favor of downloads and subscriptions. PowerPacks taps into the booming trading card market, where PSA grading adds premium value and liquidity. GameStop's core business still faces headwinds. The retailer reported fourth quarter and full year 2025 results on March 24th, showing ongoing revenue pressure from shifting consumer habits. Why did they never mention that they closed like 1,000 stores? That's the only reason the business looks like it's going, like, not doing well, or the revenues. Like, I just don't know why they never mentioned that. It's such an obvious reason why the revenues are going down. If you just do a tiny little bit of research, it's very simple. Sales declined year over year in several categories, though the company maintained a strong cash position with minimal debt. Yeah, of course sales declined. They closed a bunch of stores. Oh, man. I feel like I just repeat the same things over and over again because all these articles repeat the same things over and over again, but they just never get the story correctly. It's kind of a joke. Like, is there going to ever be a point in time where these articles actually get the story correctly? Or is this just how it is? You know, I don't research a lot of other companies, but like, maybe this is just how it is. You know, articles write terrible art, or people write terrible articles about companies, and then if you don't actually go and do the analysis yourself, that's kind of the narrative you get fed. It seems like it's only GameStop, but maybe maybe that's just how it is. Sales declined year over year in several categories, though the company maintained a strong cash position with minimal debt. A balance sheet strength repeatedly highlighted by supporters as providing flexibility for potential acquisitions or strategic investment. And also, you're making $400 million in interest just holding the cash every single year. How come nobody ever mentions that either? Like, sure, the acquisition is interesting, but they can literally just hold cash and make hundreds of millions of dollars. And if they just can keep growing the cash pile, they're just going to keep making more and more, literally risk-free. Short interest stood at approximately 62.82 million shares as of March 31st, representing about 15.33% to 15.41% of the public float. While elevated compared with many stocks, It is significantly lower than the extreme levels seen during the 2020 meme stock episode. Now, that's the first time someone actually got the short interest correctly, so at least he got something right. Good job. Days to cover hovered around 8 to 10, meaning it would take roughly that many days of average trading volume to cover all short positions under normal conditions. Oh, that's actually a very interesting point. I don't know if that's like something that's real or not. Like, I can't necessarily verify that, but if that's true, that's pretty interesting that it would take like a full week for all the shorts to cover. Ryan Cohen, GameStop's executive chairman and largest shareholder, continues to influence strategy. The company has explored various initiatives, including a new 700,000 square foot fulfillment center in York, Pennsylvania, aimed at improving e-commerce logistics. Speculation persists about potential acquisitions or major capital deployments given the cash hoard, though management has remained disciplined in its communications. I can't verify that either. I don't know. Are they actually opening up a new fulfillment center, chat? I don't remember them ever mentioning that. A limited time trade-in promotion running April 20th to 22 offered extra credit for PlayStation 5 consoles when switching to Xbox, generating buzz on social media and driving some foot traffic to stores. Such promotions reflect GameStop's ongoing efforts to stimulate hardware and accessory sales in a competitive environment dominated by digital storefronts. The Power Pack's launch caught many by surprise and sparked renewed retail investor interest. Online communities discussed its potential as a growth driver, especially if it successfully bridges physical collectibles with digital engagement. Early feedback highlighted the appeal of instant liquidity options and the security of PSA grading, which could attract both casual collectors and serious investors in the card market. That was someone in the chat says that was on 2021. They closed it in 2024, so I don't think that York, Pennsylvania fulfillment center is a thing. The chat's saying they closed it, so yeah. I mean, shout out to the chat. Shout out to the chat. GameStop has roughly 4,000 employees and operates hundreds of stores across the United States and internationally. Those store counts have declined over time as the company rationalizes its footprint. Its transformation efforts include enhancing online presence, expanding collectible offerings, and testing new concepts like refurbished gaming hardware. Analysts remain divided on the stock's long-term prospects. Consensus price targets sit well below current levels, reflecting skepticism about sustainable profitability in a challenging retail environment. Oh, GameStop, it doesn't have any issue with profitability. That's the one thing I feel like is going to be a constant throughout the full investment of GameStop. They're going to be consistently making money every single quarter from here on out. And it should be, hundreds of millions of dollars every single quarter. And who knows, looking 3-5 years down the road, they could potentially be making billions every single quarter. You really never know. However, the company's cash reserves and low debt provide a safety net that some view as undervalued insurance against further industry disruption. Broader market context on Tuesday showed cautious optimism, with the Dow Jones Industrial Average advancing modestly and technology shares mixed. What? The Dow and everything hit all-time highs. I don't know if the Dow's actually at all-time highs yet, but the S&P, NASDAQ, and the Russell are all at all-time highs. I'm pretty sure the Dow did as well, but I actually don't know. GameStop's movement appeared driven more by company-specific developments and lingering retail enthusiasm than macro factors. That sentence literally makes no sense, but okay. The stock has experienced significant volatility in recent years. From pandemic-era lows, it surged dramatically in 2021, before settling into a lower trading range. In 2026, shares have shown periods of strength tied to new flow around new initiatives, though overall year-to-date performance has been mixed amid broader retail sector pressures. Well, I mean, the stock would still be up if they didn't do the warrants and the bonds during those new flows of new initiatives. When the stock was up during those moments, they issued something that makes the stock go down. So, You also have to have context of why the stock went down, or why the performance has been mixed. If they never did the warrants of the bonds or anything like that, the stock would probably be trading at like $40, maybe. Retail investors on platforms like Reddit's Wall Street Bets and StockTwits continue to monitor GME closely. I thought you got banned if you posted about GameStop on Wall Street Bets. I don't think you can talk about GameStop on Wall Street Bets anymore. Discussions often blend nostalgia for past squeezes with analysis of current fundamentals, including the cash pile and the potential strength for strategic moves under Cohen's leadership. Some speculate about share buybacks, special dividends, or acquisitions in adjacent sectors like esports or digital entertainment. They're never going to do dividends, so I don't even know why that's being mentioned. Ryan Cohen himself in an article said he wasn't interested in dividends. And sure, you could say, the warrants are a dividend, but I wouldn't necessarily consider the warrants a dividend. And share buybacks probably aren't going to happen for a really long time. And, for the acquisitions, that's supposed to happen, but we'll see. As trading progressed Tuesday morning, attention remained on whether the PowerPacks platform can generate meaningful revenue or merely serve as a niche experiment. Oh yeah, PowerPacks is going to crush on revenue, but I think the real question is how much profit is PowerPacks going to bring in? I think it's obvious PowerPacks is going to be a huge revenue driver, but what are the margins on a PowerPack sell? I think that's what I'm looking for. I already know revenue is going to be crazy with PowerPacks. It should be over 50 mil a month in revenue. It's just how much profit are they going to make every single month or every quarter or whatever. Success could hinge on user adoption, marketing effectiveness, and integration with GameStop's existing customer base of gamers and collectors. GameStop's journey from traditional video game retailer to a more diversified player reflects larger industry shifts. Console makers and publishers have increasingly favored direct-to-consumer models, pressuring intermediaries like GameStop. The company has responded by cutting costs, improving supply chain efficiency, and exploring high-margin opportunities in collectibles and services. Yep, they are crushing. Looking ahead, investors will watch for updates on PowerPack's performance, any further strategic announcements, and upcoming first quarter 2026 results. Management has emphasized operational discipline, and customer engagement is keys to long-term value creation. Also, their financial engineering is insane. Like, I've never seen as proper of financial engineering as what Ryan Cohen and the team are doing with GameStop. And I agree with this as well because, I'm usually not excited about earnings. I don't really find earnings that interesting because for the most part, I do the math and, predict what's going to happen before the earnings ever comes out. But this year's earnings with the PowerPack numbers and stuff like that, this will be the first time I actually care about earnings and think it'll be interesting. The modest 1.16% gain in early trading underscores that while meme-driven volatility has subsided, GameStop remains a stock capable of capturing attention on news or sentiment shifts. With short interest still notable and a dedicated following, any positive catalyst could reignite stronger moves. And yeah, the longer those shorts don't close, the more expensive it's going to be for them to close. So, keep shorting it. Keep holding your shorts as well. Whether PowerPacks become a lasting growth driver or another incremental step in GameStop's evolution, the launch has injected fresh narratives into a company that has repeatedly defied expectations. As the trading day unfolded, participants weighed the blend of legacy retail challenges against the innovative experiments in a rapidly changing entertainment landscape. I don't view the stock market like that at all. I think price action and stock market structure is very relevant. I don't think a lot of the things people try to compare to stock price action is relevant, but yeah, decent article. Not bad. 14-minute stream clip. Let's go. Risk Take Live. What's up? The Last Natty. I saw your message. And again, worry about yourself, buddy. I don't know how many times I gotta tell you that. You need to learn to worry about yourself, bro. If you don't think GameStop's a good investment, good for you. Like nobody here cares about your opinion. It's very irrelevant. Risk Take Live, what's up, bro? Hope you're doing good. That's Isaiah. KCR, I forget what KCR's ad is, but he doesn't have a profile picture. It's just a blank. It's kind of like HTML's. It's just a black profile picture. Let's see. What's up, Snakes? How you doing, Snakes? Can't post about GME on Wall Street Bet for quite some time now. Yeah, that's weird. That's weird. That's weird. Never cared for Wall Street Bets even back in the day or Reddit. I don't blame you. I don't blame you. I actually have never looked at Wall Street Bets. I'll be honest. I don't think I've ever looked at it. And I don't think I ever will. I don't think this article is going to be that good, but we'll read it and see how long it takes. GameStop holds near $25 as Michael Burry adds to stake. Acquisition speculation keeps story alive. What? Okay. GameStop is trading around $24 to $25, up approximately 23.5% year to date, as the company navigates an unusual intersection of declining core retail revenues, a $9 billion war chest, a newly launched digital collectibles platform, and renewed speculation about a transformational acquisition, all amplified by the disclosure that Michael Burry has expanded his position in the stock. You think Michael Burry is really that relevant? I disagree. I don't think Michael Burry's relevant at all, but sure, if that's how you want to view it, go ahead. I think the first few things you said were accurate, but amplified by Michael Burry, definitely not. Reports circulating on social media and investment forums on April 20th lit up around Burry adding to his GameStop holdings, with commentary framing the position as a bet on minimal downside, given the company's extraordinary cash balance, and CEO Ryan Cohen's stated intention to deploy capital aggressively. I don't think Michael Burry said anything about GameStop on April 20th. I don't know where they're getting that from. Chat, can you verify that? I don't think Michael Burry said anything about GameStop. It was like a week ago or something like that where he said he added to his position. I don't think he said anything other than that. Burry, who has simultaneously been disclosed as holding bearish put options on Palantir Technologies and Nvidia Corporation, appears to view GameStop's cash-heavy balance sheet as a rare value proposition in a market where most of his public positions are short or defensive. Yeah, I mean, unless he took profits, his Nvidia position isn't working at all. Nvidia's literally trading at all-time highs, but I'll give him his flowers for the Palantir short. I'll give him his flowers for that. But bearish Burry, I don't know how good of a trader bearish Burry actually is. GameStop ended January with approximately $9 billion in cash and equivalents, roughly double the level from a year prior, after Cohen's strategy of operational cost reduction generated substantial free cash flow, even as revenue continued to decline. Yeah, because the revenue is only going down because they're closing stores. I don't know why that is so difficult for people to just understand that. The revenue, I think Q1 revenue is going to still potentially be down, but from Q2 2026 going forward, revenue should be going up and the business overall should just be growing and generating more and more profit every single year or every single quarter going forward. I just they closed a bunch of stores, like 400 something in January. So I think Q1 revenues will be down, but other than that, GameStop should be crushing going forward. The core retail business reported Q4 2025 revenue of $1.1 billion, a 14% year-on-year decline, but adjusted EPS of 0.49 beat the 0.37 estimate by a significant margin, reflecting how dramatically the business has been slimmed down. I don't know if there was actually an estimate for the EPS or not. I don't really pay attention to that. I feel like most people's opinions on GameStop are extremely irrelevant. I haven't really seen many accurate predictions or anything like that when it comes to GameStop, especially like with the EPS and revenue and stuff like that. It's pretty tough to predict. Well, I mean, if you can predict the net income, then essentially you can predict EPS, but yeah. I don't usually look at EPS. Usually just look at net income. Cohen himself acknowledged on CNBC in January that a major acquisition was being explored, one he said that would be transformational for not just his own company, but also for the capital markets in general. Yeah, we're still waiting on that. We're still waiting on that. I wonder if that's a troll. Could you imagine? Could you imagine if that was just a troll? I don't think it is. I think they got something cooked up, but it would be funny if that was just a troll. Speculation around the acquisition target has ranged widely, with Motley Fool analysis floating names including Best Buy Co., and others with consumer brand recognition and addressable physical retail overlaps. I agree it's going to be something physical retail most likely. I don't think it's going to be like a e-commerce business. I think, though, Ryan Cohen had a lot of success with Chewy, I think his true calling is turning unprofitable businesses, failing businesses into profitable ones. And it seems like, physical retail is the most obvious choice. And I don't think it's going to be Best Buy. Obviously, I always say it's going to be Target, because Target is the true competitor to Walmart and Amazon. And it would make the most sense in my opinion, but it's still yet to be seen. No deal has been announced, and short interest remains extremely elevated. Discussions around surging short volume exceeding 2,000% surfaced on Monday's trading. What? Whoever was talking about that, I don't know what they're talking about. But the shares held firmly near $25 without cracking key support levels, which some traders interpret as sustained underlying buying pressure. Yeah, I can't confirm whether the short volume exceeded or anything like that, especially 2,000%. That's ridiculous. I don't even know where they got that from, but yeah. The April 15th launch of Power Packs, GameStop's new digital trading card platform, added a fresh product narrative to the conversation. The platform allows buyers to purchase digital packs priced from $25 to $2,500 that unlock real PSA-graded physical trading cards held in vault storage, with instant resale available through the platform. I would say that's going to be how GameStop makes the most money from Power Packs, is with the resale. Being able to sell a pack for $25 and then buy the card back if they don't want it for like $10 or $15, whatever. I think that's going to be the huge driver of profit for GameStop. I don't exactly know how they're getting the rest of the inventory or anything like that. So hopefully they give more information on Power Packs for the earnings reports, because there's a lot of unknowns when it comes to Power Packs, and that I'm really interested in as an investor. The company has not disclosed revenue targets or adoption data, but the launch attracted enough attention to briefly push the stock up 2.7% on the day of the announcement. Cohen's compensation structure, which ties option vesting to $100 billion market capitalization and $10 billion in cumulative EBITDA, in a structure modeled on Elon Musk's Tesla package, has reinforced the market's read of GME as a story stock, with Cohen betting heavily on a narrative that goes well beyond video game retail. Yeah, the 10 billion cumulative EBITDA is going to be crazy, because I think they only made like 350 million cumulative EBITDA, so they got a long way to go before they're even pushing the billions. I mean, maybe they hit their first billion or two this year, 2026. I'm not really sure. I feel like that's a safe assumption. I don't know why Ryan Cohen would do this if they didn't have a plan to be pulling in like a ton of profit in the next couple years or even just this year. But yeah, there's still a lot to be seen. And yeah, it's pretty exciting, pretty exciting. Nice. 8-minute stream clip. Let's go. Let's go, chat. Let's go. Didn't know we had picks beside our names. Updated mine. Oh, I like that. I like that. I want to look at your pick. Are you golfing? It's a moose golfing. An AI moose golfing. I like that. that was a good pick. I like that. The AI moose golfing. Genius. Genius. They need to say closing stores where there are 5 and 10 mile radius. I still have 3 and 10 mile radius around me. Over stores. Over. Oh, interesting. I didn't know that. There's not many Gamestops around where I live, but they did close the one nearest to me. But that makes sense because from Layton to Salt Lake is probably like 20 miles or something. I actually don't know. Maybe it's more like 30. Makes sense. Seems saturated. I pulled a power pack the other day. Said it wasn't going to do anymore. Addict. Addict. Gambling addict. That's funny. I haven't pulled a power pack in so long, bro. I don't know that I'll ever pull one again. Unless GameStop squeezes. Like, that, I feel like that's the only scenario where I see myself pulling power packs again, is if GameStop squeezes and I'm able to take profits on a squeeze or something and then revert them into power packs or something like that. Like, that's the only way I see that happening, but I don't know if I'll ever pull a power pack ever again. Dude, Avis is up another like 10% from the last time we looked at it. It's hitting another all-time high. Avis is ripping, son. Absolutely ripping, son. I mean, this is the stock we should probably be streaming about, huh? I should probably have this stock in the title of the stream. But I'm good. I'm good. I mean, let's see what Google Trends looks like. Maybe we'll change the title of the stream real quick. Avis. Yeah, Avis stock is on breakout. Let's see. What's their car? Yeah, that's on a breakout. Breakout. I think I'm going to change the title. I think the I told you so title's funny, but it's not, it's not time yet. It's not time yet. So I'm going to change the title of the stream real quick. Here, I'll bring this down so you guys can see it. Avis budget stock short squeeze live. Is that what it is? Avis budget? I'll just do Avis. Avis stock short squeeze live. And then I gotta make some tags here. Go Avis. Oh wait, it's car. Avis, Avis stock, car stock, car Avis stock. Avis stock short squeeze. Car short squeeze. Stock short squeeze. Avis short squeeze. I should have left that Google trend thing up. Do I still have it up? There it is. See what other things we got here. Why is Avis stock so high? That's actually a good title. I'm gonna do that. I'll just make that one of the tags, I think. Why is Avis stock up? I'll do why is Avis stock up? And then I'll do a... There we go. There we go. That's how you make a title right there. Even though that title looks like garbage, I don't really care. What else? What else do we got here? Oh, I'll put that in the tags. Why is Avis stock up? Why is Avis stock so high? What is the other one? Why Avis stock is up? Why Avis stock is up? Whoops. I actually never really use Google Trends to make these tags. Usually I just make them up on the spot. Avis budget group stock. I already have that one, I think. Yep. Let's see. Car. Yep, I have all those. Avis. Whoops. Budget group stock short squeeze live. There we go. So then I'll make a Avis budget group, Avis budget stock, Avis budget. I'll be curious. Stock Avis, stock car. I don't know. I don't know at this point. Oh, perfect. 500. That was perfect. Nice. All right, there we go. A little change of the... Now, we'll see. We'll see if we get a bunch of... I mean, there's probably a bunch of other streams that have that in the title and stuff, so probably won't matter too much, but maybe we'll get a different crowd in here. Maybe. The stock is ripping, so we'll see. We'll see. Pulled a trash PSA 9 2008 LeBron James Star Quest. Lost $7, or as I say, I donated $7 to GameStop. There you go. You just gotta reframe the wordage. You reframe the verbiage. There you go. That's how you do it, bro. That's how you do it, bro. There you go. That's hilarious. I like that. I like that. Was a starter pack from BB MVP collection. Oh, that's sick. I mean, at least it's a LeBron card, you know? At least it's something cool. That's always nice. That is the one cool thing about the MVP collection. Like, no matter what, you're gonna get like a star player or something like that. So that's kind of that's kind of cool. But it sucks that it's a PSA 9, obviously. Obviously, a PSA 10 would be better. I have $25 puts ending next week on GME. Thoughts? I think anyone who trades options is a losing trader who doesn't know what they're doing, so good luck to you, buddy. If you trade options, you're probably not a profitable trader. I'd be very surprised if you're a truly profitable trader trading options. So good luck to you, buddy. Good luck to you. Never met a profitable option trader ever in my life, so. I learned that the hard way. A lot of people do, man. It's tough to be a profitable options trader. The second you buy the option, you're losing. At least if you're trading stock, you know, majority of your trades are 50-50. So like, why would you, trading's hard enough. Why would you trade an instrument that is already a disadvantage to you? I don't really understand. I mean, I've traded a ton of options, so I feel like my opinion on this is pretty relevant, but I don't understand why people trade options as much as they do. It's just a losing game. Trading in general is kind of a losing game unless you have a real profitable strategy, but most people just, randomly make trades and hope that they win. And it's like, why would you trade options at that point? You know, you're just putting the odds in the market's favor. Like I said, at least if you trade stock, it's more 50-50. So yeah, I'm not a huge fan of option trading. I think it's a losing game. Well, I know it's a losing game. I don't have to think that. I know option trading's a losing game. You got to be timely and directionally correct with options, degen behavior. Yeah, it's people just trying to profit off short-term price action because they're too impatient to just invest and wait and like go enjoy their lives. They would rather be a gambling addict and sit and, oh, it's gonna go up, or in his case, he's betting on puts. Oh, it's gonna go down. Like, yeah, that's how you want to live your life, chat. You just want to live in the price action, bro. You don't want to go outside. You don't want to do anything like actually good for you. You just want to sit and watch charts all day. That's how you live your life, chat. Just sit and watch charts all day. Don't do anything good for yourself. Sit and obsess about a minute of price action. I just buy and hold now, long-term index ETFs and GME. That's the way to go, bro. That's the way to go. I mean, if I wasn't a GameStop degenerate, I'd probably put more money in like the S&P 500 or something like that, but I'm all in GameStop, so there's no room for the S&P, unfortunately. There's no room for it. No shame in that. Why are people buying calls and puts on GME? Because they think that it's got like the same like volatile stock as it used to be, and they think they're going to be profitable. Yet literally nobody is profitable trading GameStop. Like I said, unless you're trading shares or you're, if you're day trading options, I think you could potentially make profit, but even then you still have to pay a fee. Options have fees. Every time you buy one, you pay a fee. It's just, options just are 100% against you. And yeah, I don't know, man. I don't know why people are buying options for GameStop. They think they're gonna make this massive move, or it's gonna make this massive move, or and they're gonna profit huge or something off like that. I don't know, bro. I don't understand it. I don't understand why, like I said, I don't understand why people trade options at all. I feel like if you're trading options, you're probably a beginner in the stock market, especially if you're talking about it. Like, if I'm truly just being honest, if someone's trading options, they're probably a beginner and they're probably new to the stock market. I'll be straight up. I mean, that was all I did my first like 2 or 3 years of the stock market was just trade options. It wasn't I was long-term investing as well, but yeah, a lot of my early years in the stock market were options trading, so that's why I have that perspective. I feel like it's a beginner's, it's something you get sold on as a beginner trader. And once you actually learn how trading works and that it's all just like, it's just gambling and you want the odds in your favor, just like if you were a professional gambler and you were trying to do a play on like blackjack, you'd have to learn to count cards and learn the basic strategy and all the deviations and all that stuff to have the odds in your favor. Or if you did a slot play, there's only certain scenarios where certain slot machines are profitable. Like, if you want to be, a degenerate, at least put the odds in your favor, so you can be profitable long term. Most people just don't think like that, though. They're so obsessed with like that quick little hit. They want their little dopamine hit and make their $50, which, that's fine, I guess. But I think if you want to be profitable long term in the stock market, and especially trading, you need to put the odds in your favor every single trade. And that's just not possible with options. The odds just aren't in your favor. And you can make money trading options. You can make money going and hitting a slot machine. Like, anything's possible. But if you want to make money for the long term, you got to be making trades that are in your favor. And if the trades aren't in your favor, you need to have proper risk management. So, because if you're doing like a trading strategy where you only win like 30-40% of the time, you need to be making trades where you can lose like two of them, and then that one profitable trade pays for the 2 losing trades and some. Like, it's professional gambling. That's all it is, man. You can call it trading, whatever you want, but the reality is, if you want to be long-term profitable trading, you got to be a professional gambler, and you have to approach it like a professional gambler. And even professional gamblers lose. So, I don't know. It's not. Now it's a POS that moves 5 to 10% a month, up or down, just along the stock. Yeah. I don't even think GameStop moves enough to be profit. Like I said, unless you're day trading, if you're making day trades, I think that's a different story. But yeah, I don't. Good luck making a profit on options with GameStop. Good luck. I just gamble options to be able to afford a Carnival cruise. It's fair. It's fair. I think you would afford your Carnival cruise a lot faster if you just traded stock, but you do your thing, my friend. You do your thing. I shouldn't say I think. I know. I know for a fact. If you're gonna gamble, if you're gonna trade stock. At least put the odds in your favor. Let the odds be forever in your favor. More chances going to a casino and hit a slot machine. I think you'll have a better gain for sure. I think you'll have a lot higher of a gain. I guess I'll read this article. I don't think it's going to be a good stream clip, but we'll see. This rental car stock is pulling a GameStop. Short squeeze mania has taken over Avis Budget Group. Avis Budget Group Inc. is up 6.6% to trade at 647.69 and hit a record high of 723.57 out of the gate. That is not a misprint. Despite closing the first quarter of 2026 trading at 145.85, the rental car stock has exploded higher in April, adding 383%. This morning, Barclays issued a downgrade to underweight from equal weight, but hiked its price target to $150 from $95. A year ago, the stock was trading around $80, but CAR simply cannot be stopped this quarter, finishing lower only twice the last month. Monday gapping higher by 23.3%. The absurd rally has put the share's 14-day relative strength index, RSI, all the way to 97. Holy cow, that's insane. And people are just continuously shorting it as it continues to squeeze, so it's just getting crazier and crazier. You know, eventually the squeeze should stop, and whatever, you know, anyone shorting it potentially could profit, but yeah, they're just adding fuel to the fire by shorting this thing. A massive short squeeze reminiscent of the GameStop squeeze of 2021 is the culprit. Short interest is up 19.5% in the most recent reporting period, and the 9.03 million shares sold short account for 26% of CAR's total available float. At the stock's average pace of trading, it would take short sellers almost 8 trading days to buy back their bearish bets. Man, how much are they losing at this point as well, though? Like, if short interest was only at 19% before the squeeze, you know, how much is it up now? And if it's not up, how much are that 20% of shorts losing? Like, that's a massive move. Option traders are calling the top. The equity's 10-day put-to-call volume ratio of 3.29 at the International Securities Exchange, Chicago Board Options Exchange, and NASDAQ OMX PHLX sits higher than 94% of annual readings. Echoing this, the Securities Schaefer's put-call open interest ratio of 2.61 ranks in the 99th annual percentile. That's insane, dude. That's insane. I mean, it's probably the same as the market as a whole, you know. People are so, like, upset that the market's at all-time highs, and they're probably upset that this thing's short squeezing, so they're just going to continuously short it until it finally goes down. But they're just going to continue to get wrecked. Like, what happens if it doesn't sell off? Like, what happens if it keeps going for the next, like, week or two? Those, anyone who's betting against Avis is screwed, man. I don't know, man. That's actually insane. I don't know why you would bet against a short squeeze. You know, the potential for a pretty big gain would be, you know, that's probably why people are doing it. That's enticing. If it went up 400% to the upside, maybe it goes down 400%. I guess that's the bet, but it's just so risky to be shorting against a short squeeze. So risky. You're literally just adding fuel to the fire. Today, 42,000 options have changed hands already this morning. Volume that's 7 times the average intraday amount. The weekly 5-1-750 strike call is seeing buy to open activity, while the weekly 9-18-100 strike is the most popular put. And I mean, the only way you're going to be profitable on something like this is if you're day trading, but it's going to be a tough day trade. Your stop losses are going to be very wide. The moves are going to be big, but yeah, I mean, there's probably a lot of opportunity day trading something like this, especially, you know, it's at prices that it's never seen before. There could be a lot of gaps in the volume profile that you can make day trades on, but even then, that's still pretty tough. But yeah, anyone betting on a long-term play on this, good luck, man. Good luck. That's going to be a tough trade. Up a little bit, nothing. Down a little bit, nothing. Repeats for months. That's what he likes to see. I remember Kitty saying that. That's exactly what we'd be doing with GME. Yeah, exactly. I mean, eventually you're going to get a big move on GameStop, most likely. Which direction? I think that's up for debate, but You should see a big move at some point. But maybe not, maybe they killed the volatility with all the shares that have been introduced to the market and all the potential shares as well. And also the warrants are kind of lagging behind the stock, so like, maybe people could be buying the warrants and then shorting the stock as it goes up. Like, same with the bonds. It seems like the bonds are kind of lagging behind the stock as well. So, I think I think there will be a big move at some point, but predicting when that's going to happen and what it's going to look like, I mean, just good luck, man. Just good luck. Like I said, I don't think option traders really know what they're doing. Unless I think there's like a 1% of people who are profitable option traders, but they're not random people on YouTube. I can say that for certain. They're not random people in the chat coming in here and asking what I think about GameStop because they bet against it. It's definitely not that guy. A real profitable option trader probably isn't on Twitter or Reddit or anything like that. They're probably on a beach somewhere. On a yacht somewhere. Even financial advisors don't know the direction. They just sell you the financial product, reap the benefits of the fees, and compound it as the market ticks up. Just glorified salesmen. Yeah, for sure. I don't find most people's opinions on the stock market relevant. So like a financial advisor, what is that? Straight up, what is that? I think your average financial advisor would say GameStop's a bad investment, and I would completely disagree with that. I used to be a financial advisor back in my mid-20s. It was in fixed income, and that statement is true. I didn't know that about you, Snakes. I didn't know you used to be a financial advisor. That's pretty cool. Fixed income, though, that's a simple thing to financially advise. It's like, here, buy this. You collect money on the interest, and there's basically no downside risk. That's a pretty easy sell, especially if someone has like millions of dollars. They're gonna be like, damn, I can make like 10 grand a month. It's like, yep, it's that simple. Basically risk free. That'd be interesting. That'd be interesting. Municipal bonds and corporate bonds, high yield. Oh, that's awesome, bro. That's awesome. That's awesome. I love that. I'm kind of like a financial advisor. I'm like that creepy guy you meet on the bus who's like, hey, you should buy this crypto coin. Except I'm like, hey, you should buy GameStop so you can become a multi-millionaire. And then they look at me like, what's this guy talking about? GameStop's trash. Like, are you sure about that? Are you sure about that? Oh man, I can't tell you how many people I've told about GameStop. I can't even tell you how many people I've told about the stock market. You know what's fucking insane? You know what is crazy, bro? I know people who own real estate. Like pretty decent real estate that they could probably go and sell for like 400 grand in today's world. And they are broke as fuck. And I'm not trying to throw shade or anything like that. I just want to throw this out here. Like, I know people who own real estate who are literally broke as fuck and struggling. Alright? Literally, these people could go sell their house, YOLO all into the stock market. It doesn't even have to be GameStop. You could YOLO all into the stock market, and you could be making like 10 grand a month selling options. It's actually like insane that people would rather struggle and own real estate because they think real estate is this like great investment when in reality it's not. Like, I think real estate's a garbage investment. I think it's had its moments, but owning real estate and upkeeping real estate, I think it's a joke. Especially when you can literally, if you own like a $500,000 house or $400,000 house and you go and sell it, After like taxes and realtor fees and all that shit, you probably end up with like 300,000. And I mean, obviously I'll use GameStop as the example because GameStop's the only thing I would ever put six figures in. So, you know, you buy shares at $25, you get 12,000 shares. Dude, the monthly options on GameStop sell for $100 a piece. So you could literally sell options every single month. You could sell 120 options at $100. Boom. You make 12 grand a month just being a fucking share owner, and you have no risk or anything. Like, I do not understand why people like real estate, bro. I do not understand it, bro. I want to sell my house so bad to do this play, bro. I want to sell my house so badly, bro. If I lived alone, if I lived by myself, it would already be done 100%. The only reason I don't sell my house is because of the people that live with me. If it wasn't for that, it would be done, bro. I'd be making 10, 12 grand a month. Easy, simple, light work. But it's just sad. It's just sad watching my friends like hold on to this real estate dream because they think their real estate's going to be worth $1 million in the future. It's like, sure, sure, your real estate, especially where I live, real estate probably will be worth like $1 million, but that's not going to be for like 5-10 years. You're going to struggle for 5-10 years to hope you make $1 million. Or not even $1 million because the house is worth 400,000 now. You're gonna wait 5-10 years to make 600 grand. If you do what I just talked about, $12,000 a month, that's 144,000. You make 600 grand in like 3 years. What is that? 144,000 times 3, 4 years. 144,000 times 4. Yeah, 4 years you make 600 grand. Obviously, you'd have to pay taxes, whatever, but still. Like, you can make so much just being a stockholder. Real estate just doesn't make sense, honestly. It just really doesn't make sense. Paid once a month. If I was still there, they would be like stop selling GameStop and sell these bonds. Be like, no, I'm trying to make my clients rich. I'm trying to make them rich. Can you explain that again? Yeah, I'll open an option chain and explain it because I feel like with a visual example it'll be better. Excuse me. We have Micron building a mega structure here. We made like 180K on our sell back in December. Housing PR is way overinflated here because of that. Oh, housing prices way overinflated because of that. Interesting. Go homeless, move to Cali, save money. Definitely not Cali. I mean, unless you want to go live there, but I mean, shit, if you were homeless and you just owned a bunch of GameStop, your life would be good, bro. Like, straight up. Your life would be fucking good, bro. Your life would be fire. Alright, I'll explain it again. But you also have to realize where I live, real estate's kind of expensive. I live in Utah. It's one of the fastest growing real estate markets in the US. So, your numbers are going to vary depending where you live. But I'll just use my house as an example. My house is probably worth like $450,000. It's not very nice, so I'd probably sell it for $400,000. Taxes, I don't know what taxes on 400 grand would be times 20%, I would assume. So 80,000 in taxes, realtor fees are probably like what, 6% and all that stuff. So we'll just say 100 grand in fees. So you sell it for 400,000, you end up with 300,000, and you wouldn't have to pay taxes till the end of the year. So you would actually have, that extra 80 grand up until you filed your taxes and stuff like that. But we'll just, make it simple. We'll say we got $300,000 and you bought, you transfer this $300,000 into GameStop shares, or, whatever you want to do. Obviously, I would do GameStop because, like I said, that's the only thing I would personally be comfortable with putting this much money into. So, GameStop's trading at $25 right now. So you would get 12,000 shares for $300,000, right? So you would, instead of owning real estate, you would have 12,000 shares of GameStop. Obviously, you would have to, go find somewhere to rent. That'd probably be $2,000, $2,500 a month. I'm not really sure. It depends where you live and what you do, but we're not really talking about that. So, 12,000 shares. We go to option chain on games. Oh, it actually went down into the close, but if we go on the option chain, 15th of May, your at the money options are trading at $100. You could even go 2 months, you could go to June. These were trading for a lot more a couple days ago. These were actually trading at like over $200, but so we'll just go off the, obviously you would pretty much sell the option whenever the stock is up. You probably wouldn't sell it on a day like today where it's down, but say you did. Say you did. You sold this monthly option. It expires May 15th at $100. You have 12,000 shares. So, an option is the right to buy or sell 100 shares. So, you would do 12,000 shares divided by 100. So you'd be able to sell 120 calls, essentially. Well, 120 calls at $100. I mean, we can just do it here. 120 calls, confirm and send. You would have to pay like $80 in commissions and fees, but that's really nothing. $11,919.93 for a 1-month option. And the only risk selling an option like this is that you have to sell your shares at the strike price, which, that could be potentially a big risk with GameStop because, like I said, I think there's going to be a big move one day. Obviously, that hasn't happened, Selling options has actually been an incredible strategy the past 2 years, but I just don't do it. But if I was to go, sell my house or something like that, why does it say max loss is infinite? Because if you didn't have the shares, your max loss would be infinite. But if you have the shares, you can sell naked options. Like, I could sell this without having 12,000 shares. But, so if you didn't have the shares, your max loss would be infinite. But if you have the shares, your max loss would be whatever, the strike price. If you bought shares at $25 and you had to sell your shares at $24.5, that would be very variable. But yeah, if you didn't have the shares, your max loss would be infinite. So, you would sell this, you'd collect $12,000 in credit, and you would have this option sitting in, you would have these 120 options, or this 120 call sell in your account. And, if the stock's trading over $24.50 on May 15th, 2026, you would have to sell your shares at $24.50. But if it was below $24.50, you essentially would just collect this $12,000 for free. So, there is, the risk is you have to sell your shares at whatever strike price you sell. Like, you could sell the 25 strike price for $83. You sell 120 of those, that's almost $10,000. So if you wanted a little bit more a little bit higher of a strike price, you know, you could do that. But, you know, the whole point I'm making about this is that, like, I don't get why people, like, own real estate and struggle. You know, if you can go and make $12,000 a month, if you you know, if you have like a $500,000 house and you sell it, you collect, you know, you get 300 grand, whatever. Like, if you can go and make $12,000 a month, like, I don't see why you would own real estate. It just does not make any sense to me. Unless you're like attached to the house or you have a family or something like that and you need all that space. You know, there's a lot of reasons why I think people should own real estate, but like if you're just like a single person or, you know, whatever, I don't know why you would struggle owning real estate when it's that easy to make money. Like, literally the snap of a finger, you make 10, 12 grand a month. Like, I just don't know why. You can't do that with real estate. If you go and rent out a $500,000 house, the most you're getting is like 3 grand a month. So it just, real estate just makes zero sense to me. It just makes zero sense. It just makes zero sense. I'm on an iPad, sucks typing on this. Fucked between the real estate and the IRS. Why does it say? Let's see. What's up, Hugh? That's when Ryan releases the big news. Yeah, exactly. Exactly. Real estate has renting potential. You can depreciate it and make it a cash flow positive asset while it appreciates. Dude, real estate hasn't appreciated in the past 5 years. It had that little moment when interest rates were low where they went up a lot. We'll say the past 4 years. Real estate has not appreciated at all. And you can only make like 2-3 grand a month renting real estate. I just showed you a way to make $10,000, $12,000 a month with that same, you know, thing. Like, that's, you know, real estate just does not compare with what I just talked about. The only benefit real estate has is the barrier to entry is a lot lower. You know, you can use like 80 to 100 grand to get into a $500,000 house. But yeah, it's such a joke. Like, it's so expensive to own it. It's so expensive to own it. Like, are you even making money while it appreciates if you have to fix something? It's just, I don't know, man. I don't know. You would have to rent to traveling nurses, not Section 8. You're fixing everything when they get kicked out. Yep, exactly. Exactly. Why is the stock going up so much? Your assumption is Avis stays high. GME has been flat here and there. It's all what's hot. Sometimes stocks are hot. Sometimes real estate is hot. It has nothing to do with IV. Back before the earnings, you could sell a 1 month option for $150. So this has nothing to do with IV. The 1 month options are always going to be around $100, no matter what. So I think you're assuming that I'm assuming, but I'm not. I've definitely done the research. I look at this shit every single day, my friend. Like, I think you're assuming that I'm assuming. I'm not assuming. This is the reality of the world. When you're a multi-millionaire or you have hundreds of thousands of dollars, the stock market is the clear choice. Real estate is a joke. Real estate is a joke. Home insurance, but your rates go up on your insurance premium. So Avis is that because of what? It's a short squeeze. Presumably. That's what everyone's saying. The stock short squeezed, but why it short squeezed or whatever, I think that's up for debate. It was trading at like a $4 billion market cap while the stock is, they're sitting on like 30 billion in assets. And sure, they have quite a bit of liabilities, but I think potentially the stock was just undervalued maybe. Maybe some information got out where they're going to be profitable going forward or something. I don't know. There's a lot of reasons of why the stock is going up or squeezing or whatever, but let's assume to assume. I just can't get behind that because I showed you the numbers, I showed you the reality. You just can't do that. Like let's go to Real Estate Utah right now and let's see how much houses are renting for that are similar to mine. Let's see. How do we do house? There we go. Houses. We'll just go to newest. $3,000. That house is pretty similar to mine. Older. I mean, my house isn't that old, but $3,000, 2,500. That one's small, but I mean, you can go rent this house for $1,800. If you're making $10,000 a month, $1,800 is nothing. Like that's literally the point I'm trying to make. Like, sure, you can own a house, whatever, but like, you could make $10,000 a month just owning stock and selling options, and that would literally cover you forever. Like you wouldn't you wouldn't have any risk. You wouldn't have to go and replace a roof if the roof needs to be replaced or any like. That's the point I'm trying to make. Like, real estate's just a joke. It's just a joke. I mean, this house, 2,100. Like, you're not making $10,000 a month renting out real estate. Maybe in like 40 years, maybe in 40 years you might be able to rent out your real estate for like 5-10 grand, but probably not. It's just real estate doesn't have what the stock market has, and in today's world, I think making all your money online is I wouldn't even say today, but today and going into the future, making money online, it's, that's how you're going to make it. I think real estate's going to get so expensive that it doesn't even make sense to sit on it. And you're kind of already seeing that, at least where I live. Might be different where you live, but where I live, real estate does not make any sense. Real estate is for fake realities. People think that they have money, and if they don't, because unless you don't have it in your hand, it's not money. I mean, yeah. I mean, if you want to go and get a refi or something, you have to be making enough to get the refi. Like, to even get the value out of your house is kind of a joke. I wanted to get a refi recently, but don't make enough to get all the equity out. Sure, the monthly payment would go up a lot, but with the example I just showed you, even if the monthly payment's $2,000 or $3,000 a month, like if you're making $10,000 a month, it just doesn't matter. It just doesn't matter. How about this? It all depends on your cost basis and when you bought. I don't agree with that. I don't agree with that, because you can buy shares of GameStop right now and sell the options the same day and make the $10,000. So I don't agree with that. I don't think the cost basis matters at all. I think if the cost basis matters, the lower, you're just going to make even more if you buy at a good cost. Or at a good price, I should say. Real estate's being completely manipulated because the people who owned it want to hold it and then create control of the market. I don't necessarily agree with that. Real estate's just expensive because, I mean, it's expensive to own for someone who doesn't have the money to buy the house in full because the rates are so high. But as soon as rates go down, the houses in general are just going to be expensive. Expensive how? For the people who already own or the people trying to buy? Both. I mean, more the people trying to buy, of course, but if you own a real estate right now, it's pretty expensive. Even if you have a good interest rate or whatever, like, it's pretty expensive. What kind of industry are you working in? You're looking at it. You're looking at it. I make YouTube videos and invest in the stock market. Not great. I mean, the investing part's great, but the YouTube part isn't great. It's fun. I enjoy it, but making a living on YouTube is only a small percentage of people are doing that, and it's not me. I make enough to buy some McDonald's here and there. That's about it. If it wasn't for the investing, I would not be able to continue to do this. How about this? Real estate's expensive because you can't failure to deliver. I don't know what that means, but no. You have the choice of owning real estate, and I mean, let's go to trading economics and see the data for real estate appreciation, since that's part of your argument. Real estate, I forget what they call it on here. I think it's growth. I think it's real estate growth. I think they call it growth. United States. I don't know what they call it on this website. I forget. Where is it? Producer price index, I think. I mean, that's one of them, but that's not the one I'm looking for. I don't know why I can't find the right one. Maybe it's just on the calendar somewhere. I don't know, but whatever, I can't find it. But last month, real estate appreciation was the lowest it's ever been, 1.6%. GameStop just went up 20% in like a couple months. So stocks are clearly the winner. And just the income you can produce by being a shareholder is insane. And as the stock grows, those options are only going to get more and more expensive. When GameStop's trading at $40, $50, every 100 shares is going to make you like $200 or $300 a month, not just 100. So there's also that aspect as well. Yeah, I can't find it, but it's just yeah, I don't think real estate's it. I don't think it's it. I think the numbers don't lie. The numbers do not lie. I don't know if I want to read this one. And it's like you wouldn't even have to sell all the options. You know, if your rent was like $2,500 a month, or you know, your expenses in total, like rent and everything, all your bills in total were like $3,000 a month or something like that. You know, you'd only have to sell like a fourth of the shares. So instead of selling all 120 call options, you could sell like 30 of them. You know, 30 times 100, boom, there you go. There's your $3,000 for your all your bills. And then you still have 90 shares just sitting, and if they appreciate, that's fucking nuts. Like, and also, you know, if you own real estate, like let's be real here. How long is it going to take to make $100,000 cash? 5 years? Maybe if you have a really, really, really good job, maybe 3. 10 years if you have a complete shit job and a lot of bill. Like, being able to make $100,000 like that or more is like insane. So there's also, you know, also that aspect of it. But most people have mortgages and stuff like that. So realistically, they'd probably only end up with like $200,000 or less if they sold their house, because they'd have to pay the taxes, the realtor fees, and then they'd have to pay off the mortgage. So you probably wouldn't get, you know, 300,000. You'd probably end up with a lot less, but even 200,000, you know, that's still 8,000 shares. 8,000 shares, $100 a month. I mean, that's well, 80 times, well, that's $8,000. So that's still great. That's still awesome. I mean, how long would it take to make $200,000? Probably take a long time. Or to save up 200,000. I mean, making 200,000, you know, that's completely different than saving 200,000. Like, how long would it take to save 200,000? That would take a long ass time. So, like, if you, I'll stop talking about real estate. I'll stop talking about it, but it's just the numbers just don't lie. The numbers just don't lie. Like, being a stock investor is clearly better, no matter how you look at it. I guess I'll read this article before I go. I don't think I'll make a stream clip out of it, but we'll check it out. Let's see. Can I hide all these ads? There's so many ads. So many ads! Alright. 5 years after the meme squeeze, here's where $1,000 in GameStop stands today. GameStop investors who bought at the peak of January 2021 frenzy are still deeply underwater. Those who held for a decade tripled their money. Timing was everything. Yeah, definitely. Definitely. A bull case exists, but investors are paying a meme premium for a business whose core is shrinking. That is definitely not true. I don't think you're paying a premium at all. The analyst who called Nvidia in 2010 just named his top 10 AI stocks. Oh man, I can't wait. I can't wait to hear his top 10 picks. Okay. GameStop shares were trading for about $25 a piece 5 years after the Wall Street bets turned a dying mall retailer into a cultural flashpoint. The numbers tell a complicated story. Investors who bought at the peak of January 2021 frenzy are still deeply underwater. Those who held for a decade tripled their money. Timing was everything. It's just repeating back what was up there. Do you think there will ever be a time? Do you think the people who bought in January 2021 are still holding? I'm sure there's like a few out there, but I'd imagine most people have sold and are off in their own, doing their own thing. But it'll be pretty interesting if the investors from January 2021 end up being profitable. That'll be crazy. From short squeeze to something stranger. The January 2021 short squeeze sent GameStop from $4.31 a share, split adjusted, on January 4th, 2021, to $25.44 by February 26, 2021, with intraday peaks far higher. Ryan Cohen, who had already taken a board seat, became chief executive and board chair. He closed the NFT marketplace, divested Canadian operations in May 2025, divested French operations, and rationalized the store footprint aggressively. I'm surprised they actually mentioned that they sold the French operations. Very surprised they talked about that. Or mentioned that, I guess I should say. GameStop raised $4.2 billion via zero coupon convertible notes and deployed $500 million into Bitcoin. Cash equivalents and marketable securities reached $9.01 billion by the end of fiscal year 2025. The company announced a performance-paid pay package for Cohen tied to a $100 billion market cap target, which generated neutral sentiment on Reddit despite significant engagement. Collectibles grew 31.2% of sales in Q3 fiscal year 2025, up from 19.9% the prior year, while software revenue continued declining. This is a decent little summary of GameStop as a whole. Not bad. What $1,000 invested in GameStop would be worth today? 1 week would be a 3.6% return. Current valuation would be $1,036, so you'd make $36. The S&P has only gained 2.1% so far. In 1 month, GameStop gained 10.4%. Your investment would be $1,104, and the S&P has only gained 9.3%. Year to date, though, GameStop has returned 24.1%. That's huge year to date. Your $1,000 investment would be $1,241, and the S&P has only gained 3.9% in year to date. So if if you're a GameStop investor year to date, you are absolutely destroying. But on the longer time frames, 1 year, you would be down 7%. Your $1,000 investment would only be $930. S&P is up 34.6% overall the past year. But the S&P had a huge year the past couple of years, and GameStop mostly didn't move. 5 years, you'd be down 32.2%. Your $1,000 investment would be $678, and the S&P has gained 70.1% in the past 5 years. So that's pretty massive, but what's going to happen the next 5 years? Do you think maybe the S&P does do another 70%? That'd be wild, but how much is GameStop going to do in the next 5 years? Because 5 years ago, GameStop's business was not great. It wasn't growing. Definitely wasn't profitable. Now, GameStop's growing, profitable, and the stock price action is phenomenal. So I don't think the past 5 years are necessarily going to reflect the next 5 years. Maybe for the S&P. I don't even think the S&P is going to have as much gain as it's had recently, but we'll see. That's the whole point of my GameStop investment, is to outperform the S&P 500 over the next few decades, however long I'm alive, basically, because I don't think I'll ever not be a GameStop investor. Maybe 10, 20 years down the road, they'll do something I don't like. Who knows? But yeah, for me, if GameStop outperforms the S&P, it was a successful investment. And then the past 10 years, GameStop is up 203.9%. Your $1,000 investment would be worth $3,039. But the S&P is up 238.9% the past 10 years. So both really good returns. And yeah, I think GameStop's going to outperform the S&P the next 10 years. But we'll see. It doesn't mean I'm correct. That's just the bet. The 5-year number stings. Buying in April 2021 after the initial squeeze, but at elevated prices, left investors with negative 32.2% 5 years later. The meme frenzy pulled the stock far above rational valuation. I do agree with that. That is something I actually agree with. And then reality finally caught up. Even 2026 strong year-to-date run of 24.1% has not rescued post-squeeze buyers. Well, it's still very early, and also they issued the warrants and the convertible bonds, so the stock is trading a lot lower than it probably should be. Like, if they never released the convertible notes or the warrants, the stock might be trading a lot higher, you know. That's just an assumption, but yeah, you know, people arbitrate the bonds and the warrants. They buy the warrants or buy the bonds and short the stock. So I think GameStop would be up a lot more if it wasn't for those things, but who knows? The 10-year holder tells the opposite story. Owning GameStop before the cultural moment at $8.22 in April 2016 produced a 203.9% gain. That is a patient investor who happened to be holding when things got out of hand and who stayed put through the crash that followed. I mean, if you were holding before the squeeze and you didn't sell, that's actually wild. Especially even if you didn't sell, you should have sold at least a little bit. Like, come on. But if you just held the whole time and never sold, you're a savage. An absolute savage. Even the 10-year gain underperformed the S&P 500, but note that the shares have outperformed so far this year. Yeah, like I said, the past 5-10 years are not going to reflect the next 5-10 years. I truly think GameStop's going to outperform the S&P 500 by a massive amount. And if you look at like Berkshire Hathaway and the S&P 500, the past 50, 60, 70 years, I can't remember exactly, but the Berkshire Hathaway returned 6.1 million%. The S&P only returned 45,000%. So, you know, what's going to happen if GameStop ends up having some returns like that? That would be insane. That would be actually insane. The case for and against. The bull case exists. GameStop carries roughly $9.01 billion in cash and securities against a market cap of approximately $11 billion. Full year fiscal 2025 net income reached $418.4 million. It's actually quite a bit higher than that, a little over $600 million. It only shows as $418.4 million because of the Bitcoin loss, but if you're not counting the Bitcoin loss, they made almost $650 million. Ryan Cohen bought 1 million shares personally in January 2026. If the Bitcoin treasury appreciates and collectibles grow, the fundamental picture could improve. Yeah, Bitcoin goes back to where they bought it. I mean, that's huge. The bear case is harder to dismiss. Core retail revenue is in secular decline, only because they closed a bunch of stores. The revenue isn't going to be declining much longer. Diluted shares stand at 591.7 million after convertible note issuances, and the company holds no earnings calls and provides no guidance. So yeah, that's an awesome thing for someone like me because I don't need my hand held through an investment. I can do the research myself. So earnings calls and guidance, very irrelevant to me. At a 32x trailing earnings multiple, you are paying a meme premium for a business whose core is shrinking. The core business is definitely not shrinking, but whatever. The analyst consensus price target sits at $13.50, well below current levels. $13.50 is like book value, so that's pretty wild. And I'm not going to read this part because who cares about the analyst who called NVIDIA? It was pretty easy to say now that, yeah, I predicted NVIDIA. Okay. How bullish were you back in 2010 when you were actually buying it? Very debatable, I think. Very debatable. Damn, I just turned that into a 10-minute stream clip? That's crazy. That's crazy. I can't believe I just turned that into a 10-minute stream clip. All right. Anything else? Anything else? Nope, nothing. I think there was another article, but I'll read it tomorrow or something. You rolling today? They're just giving me stuff to talk about, I guess. if you can turn a short article like that into a 10-minute stream clip, they mentioned a lot of good things. Or they just mentioned a lot of bad things that I had to negate, I guess. Oh, alright. You guys got anything, chat? I think I'm about to get out of here. We do have Tesla earnings tomorrow. Intel on Thursday. Right? Tesla tomorrow? Yeah, Tesla tomorrow. And IBM, Texas Instruments, ServiceNow. You got quite a bit of earnings tomorrow. And then Intel on Thursday. And some other stuff. But, yeah, so I'll definitely be streaming tomorrow. Stream the Tesla earnings. Doesn't look like nothing on Reddit here. Yep, nothing there. Peace out, boys. Time to keep on with Games of Thrones for the second time. Enjoy it, enjoy it. I'm gonna go watch the rest of the Kill Tony. Go watch the rest of it. It's pretty good. I saw some of it yesterday, but yeah, I'm gonna go watch the rest of Kill Tony and chill out. But I appreciate you guys supporting the stream, all the OGs. Thank you guys. Really appreciate it. Hopefully my real estate rant didn't upset you. That should be I mean, if you've been here for long enough, you know how I feel about real estate and crypto and all those things, so my opinions shouldn't upset you. It should be very apparent, but I think it's just interesting. There's just some interesting things that don't get talked about in the real world, or, you know, by mainstream media, or even people who are, you know, like me, and they're just random streamers streaming about the stock market or finance or anything like that. I just think there's a lot of things that people don't talk about and they don't want to make mentions of. But, you know, I'm like I said, if I didn't have people living in my house, that's what I would be doing. But so, yeah, but I'm out of here. I appreciate you guys. Later, Moose. Later, Snakes. I don't know who else is here. But if you're new here, appreciate you giving the stream another chance. And shout out to all my OGs. I appreciate you guys. Thank you guys for always supporting the stream. And I'll catch you guys tomorrow for Tesla earnings. See what Elon's got in store. Mr. Elon Musty Musk. And then Intel on Thursday. So, I appreciate you guys. I'll catch you tomorrow. Have a good rest of your day. God bless ya. Peace!